Good evening, everyone. Thank you so much for joining me for another edition of Office Hours. My name is Dr. Tisa Silver Kennedy, and I'm the founder and director of the Maryland Center for Collegiate Financial Wellness. So let's get into this evening's session. Right, first I'd like to tell you a bit about the Maryland Center for Collegiate Financial Wellness. Then I'll talk specifically about office hours, and from there we'll jump right into questions from our community. Over the past few weeks, we have had a lot of questions about when repayment is going to resume, what options there are for borrowers who are experiencing student loan default right now. We've also had a few questions about consolidation, and of course, our most popular subject to date, the Limited Public Service Loan Forgiveness Waiver. Throughout tonight's session, please do feel free to drop questions in the chat, or if you're watching on Facebook Live, make sure that you leave a comment there. I'll be checking periodically to make sure that I address all of your questions as best as possible. All right, so let's move on. So the Maryland Center for Collegiate Financial Wellness was founded in the summer of 2021, and we are building financial life skills and empowering students to thrive. We have quite an ambitious vision for all of Maryland's college and career students, and that is for them to achieve 6 pillars of financial wellness, and they're listed here. One is being credit worthy. The second is being ready. Third is resilient. Fourth is empowered, fifth is successful, and sixth is thriving. I'm not going to read all of the text to you all because it's quite a bit, but if you're interested in learning more about the Maryland Center for Collegiate Financial Wellness, please do visit us online at mccfw.org, and you can find more about our team, our vision, and how we are working to bring that vision to fruition for Maryland's college and career school students. So about office hours. Office Hours is a free semi-monthly virtual student loan clinic where we provide borrowers with a trusted venue to help them navigate student loans and prepare for financial success beyond repayment. Before I get into answering the questions for our community, I must say that Office Hours is held for informational purposes only. I will be talking about a lot of financial issues and student loans, repayment strategies, but the information that you receive tonight is for informational purposes only. It's up to every borrower to evaluate information from many sources, and I'd highly recommend including the Department of Education as one of your sources if you have federal student loans. But you'll need to take stock of all of that information, look at your own personal situation, and make a decision that works best for you. But we're here to help. And again, you can visit us online at mccfw.org, submit questions about student loans and other topics related to paying for higher education. So let's go ahead and get into our first question. The first question is, are loans going back into repayment on May 1st of 2022? When we last met, I believe that was the case. May 1st, 2022 was the date that the Biden administration had released as the date that student loan repayment would begin again. However, another postponement was announced, and now federal student loan payments are scheduled to resume after August 31st of 2022. So we were looking at May 1st, and now we're looking at August 31st. That's when we can expect for now that payments will resume. And of course, that leads to the next question. Naturally, is this going to be the last extension? It's challenging to make plans without knowing when payments will be due. I totally get it. It does make it kind of difficult to make long-term plans when you're not sure when your student loan payments will resume, but I would encourage you to take advantage of this extension of the payment pause to take a look at your spending habits. Know yourself, know your inflows and your outflows, and prepare for the day when those student loan payments resume. I know that it's very hard to do that down to the dollar when you're not sure when payments will resume, but use this time truly as a time to evaluate your situation. Take a look at the repayment plan options that are available on federal student loans by visiting studentaid.gov and using their loan simulator, just to get an idea for what repayment could look like when payments resume. As for the question, is this going to be the last extension? My answer is stay tuned. For now, the date that I have is August 31st, 2022. There are lots of people talking about another possible extension, but I prefer to go by policy and official announcements. And right now, the most recent official announcement is that those payments can be expected to resume after August 31st of 2022. So I'll be watching just like you are. Okay, so one thing that I did want to take a moment to talk about was a feature of this particular extension that has not been present for the rest of the student loan repayment pause that we have I've been enjoying at least since March of 2020. And that is that this particular extension, along with the announcement of the extension, there was the announcement of a fresh start option that will be extended to federal student loan borrowers who have loans that are in default. So I just wanted to take a few minutes to talk about student loan default, some of the consequences that are associated with it, and why providing something like a fresh start is such a great opportunity and a relief to many federal student loan borrowers who have experienced extreme difficulty in making their payments. So first, we have to take a step back and look at what it means to be in default. So a federal student loan is considered to be in default once the borrower has missed payments for at least 270 days. So let's draw a clear line between what it means to be delinquent and default. Technically, delinquency begins right after you miss a payment. So we're talking immediately, if you're late, immediately after missing a payment, technically you could be considered in delinquency on that loan. Default takes a lot longer to get to. That means that for at least 9 months, you have not made any payments, nor have you come to an agreement with your servicer about alternative arrangements. It would just be great if everyone could avoid default, reach out to their loan servicer to talk about the options for deferment or forbearance before getting to the point of missing payments for 9 months. But there are a lot of people who have found themselves in that predicament to the tune of approximately 8 million student loan borrowers who are currently in default. Right now, collection efforts for those people who have had their loan payments paused through the current forbearance, collection efforts have been paused as well and should remain paused until at least August 31st of 2022. But I just wanted to highlight this fresh start that was also announced in conjunction with this most recent extension on the repayment pause. So the Department of Education, according to the Office of Federal Student Aid, is allowing all borrowers with paused loans to receive a fresh start on repayment by eliminating the impact of delinquency and default and allowing them to re-enter repayment in good standing. I know that as soon as this announcement came out, I went straight to Facebook, posted something about this because I was excited to see this type of relief extended to borrowers who are experiencing federal student loan default. And of course, there are lots of questions. What exactly does this fresh start mean? Does the fresh start mean that penalties and fees will be wiped out? Does it mean that my wages will no longer be garnished? I am awaiting details, as we all are. So once the Department of Education begins to release the details of exactly what that fresh start means, I will be coming here to share those details with you, but please just stay tuned. The fresh start is in the works. It was announced, but the details of that fresh start, exactly what it will entail, I'm looking forward to seeing those details as they're made available from the Department of Education. So why is this so important? It's really important because the consequences of student loan default are far-reaching and severe. So I just want to review with you some of the consequences of student loan default. First is that your entire unpaid balance, that would be the balance of the loan, any interest could become due immediately. And if you're in default, you've not made a payment for more than 270 days, then I'd venture to say that you would not be able to pay your entire balance if it became due immediately. Second is you lose eligibility for deferment or forbearance and the ability to choose a repayment plan. Next is that you lose eligibility for additional forms of federal financial aid. So if you were planning to go back to graduate school or re-enroll, you would not be able to access additional federal financial aid because of having those other student loans in default. Next is that the default is reported to credit bureaus, which can damage your credit rating and affect your ability to borrow. Any item on your credit report that's negative can affect your score, but also make future financing more expensive for you. So if your credit score is lowered because of the default, that means that it may be more difficult for you to take out an auto loan or for you to buy a home. And if you are able to get that type of credit extended, then you may find that your terms are not as favorable. The interest rates are higher for you than they would be if your credit was in a good condition. And so having something like default or these large unfavorable items on your credit history can make the rest of life where financing is concerned extremely expensive. So that reporting to the credit bureaus is definitely damaging. Next is that your tax refunds and federal benefit payments may be withheld. Also, your wages could be garnished. You could be subject to legal action. You could also be held responsible for court costs, collection fees, attorney's fees, and other costs associated with the collections process. So this could get very expensive. Lastly, your school may withhold your academic transcript. And I know for some people, they'll look at this list and say, well, the school withholding the academic transcript, that's probably the least important item that's here. But just remember that sometimes when you are applying for jobs, you may be required to provide proof, official proof, that you have completed the degree or credential program that you say you've completed. And in that case, you may need to go back to your institution and request official academic transcripts. If you have a student loan default on your account, then your school may withhold the academic transcript and you would not be able to provide proof to that employer that you have the credential that you say you have. And that could prevent you from getting a job, which would prevent you from earning money. So please don't take that item about the withholding of the academic transcript for granted, because that can affect you in a number of ways. I wanted to review this list with everyone just to show you how severe and how far-reaching, the consequences of student loan default can be, and to also remind you that it takes not making payments for at least 270 days to get to this place. So if you have have been in a place where you are unable to make your payment, or you think you're not going to be able to make your next payment, I encourage you to please reach out to your student loan servicer. Review your options for deferment or forbearance so that you can use that temporary pause to figure out a feasible plan to return your student loans to a favorable standing. The servicers want to work with you, but you have to reach out to them and let them know that you're experiencing difficulty. Give them the details of your situation, and they'll let you know which options you qualify for. So I am glad to see the fresh start to help student loan borrowers restore those defaulted loans to a more favorable status. Without this fresh start, there are actually 3 options to return a defaulted student loan to a favorable status. The first option was one I did not include, and that was the option to repay your entire balance immediately, because this is not feasible. It's not really practical. I think for most people, if you're having trouble making a monthly payment, you probably could not afford to pay the entire balance right away. So I didn't include that option there. The other 2 options are to consolidate out of default and to rehabilitate a defaulted loan. With consolidation, this language is pulled straight from the Office of Federal Student Aid. Consolidation requires the borrower to agree to repay a new direct consolidation loan under an income-driven repayment plan, or make 3 consecutive voluntary, on-time, full monthly payments on the defaulted loan before you consolidate it. As for rehabilitation, this is a one-time opportunity that requires the borrower to do 2 things. The first is to agree in writing to make 9 voluntary, reasonable, and affordable payments as determined by their loan holder within 20 days of the due date, and make all 9 of those payments during a period of 10 consecutive months. So you have these two options to restore a loan that's in default to a favorable status. But there are some other points to consider when you are trying to figure out if one of these is for you. The asterisk that's there on the rehabilitation side is that no payments would be required until repayment resumes after August 31st of 2022. But this extending this option of a fresh start would automatically bring these defaulted loans back into a good standing. So again, it's good to see, it's encouraging. And now that we have reviewed all of the consequences of student loan default, you can see why that offering of a fresh start can be so beneficial to student loan borrowers who are experiencing difficulty in repayment to the point of defaulting on their student loans. So let's go to the next question. And this is a shift of subjects to a consolidation in public service loan forgiveness. So the question is, I'm applying for public service loan forgiveness through the waiver, and that's the limited waiver. Someone told me not to consolidate my FFEL loans with my direct loans. But if I don't consolidate, won't I have to apply for PSLF twice? Okay, so that is a loaded question. Let's begin by talking a bit about what it actually means to consolidate. So with consolidation in general, it's usually about combining two or more existing loans into one new loan. What happens is the existing loans are paid off and a new loan is originated for the value of those existing loans. With federal student loans, you can actually consolidate one loan, so you don't need two. But in most cases, consolidation means taking two or more existing loans, putting them together after they've been paid off and a new loan is originated. So the example that you see on the right has two loans, one loan for $30,000, another loan for $40,000. Those two loans are put together and they create a consolidation loan for $70,000. So the $30,000 loan is paid off, the $40,000 loan is paid off, and one $70,000 loan is originated to take the place of those two older loans. There are several reasons why a borrower may choose to consolidate. The first one is consolidation can help you with record keeping. If you no longer have two loans, then you don't have to worry about two payments or even two lenders or two servicers. If you consolidate, those two would become one. The second reason is to gain eligibility for public service loan forgiveness. Under the original rules of public service loan forgiveness, direct loans are the only loans that qualify for public service loan forgiveness. So if a person had FFEL loans, or even if they had Perkins loans, if they wanted those loans to become eligible for public service loan forgiveness, they would have to consolidate those older loans into a direct consolidation loan. And once the direct consolidation loan had been originated, that loan could be eligible for public service loan forgiveness because it's now a direct loan. Another reason that some people think about when they're exploring whether to consolidate is trying to find a lower interest rate. This is not necessarily something to look for when it comes to consolidating your loans through the federal government. When you consolidate through the Department of Education, they are looking at the interest rates on your existing older loans. So when your older loans are consolidated, the new loan carries an interest rate that is the weighted average, close to the weighted average of the interest rates on those individual loans. And usually, I believe they round up to the next highest 1/8 of a percentage point. So interest rate savings, that's not a reason to pursue consolidation through the federal government. However, some people choose to consolidate their loans outside of the federal government. That's usually referred to as refinancing because you are basically creating a new loan and looking for better terms, especially in the form of a lower interest rate. So if you refinance, that's not something that's done through the federal government. You refinance with a private lender. Once you do that, your federal loans become private loans. They are now with a lender that is outside of the federal government. That means the terms are completely different. It also means that you would lose access to benefits for federal student loan holders, including eligibility for programs such as public service loan forgiveness. So if you're looking for a lower interest rate, I completely understand your desire to find a lower interest rate, but just make sure that if you indeed are going to move to an outside lender, a private lender, that you have read through the list of benefits that you will lose and you are comfortable with losing those benefits, including eligibility for programs such as public service loan forgiveness. So let's take a look at consolidation and what it can mean with the limited PSLF waiver. So the question that we had was about, it was from a borrower who had both direct loans and FFEL loans. And they said that someone told them not to consolidate the FFEL loans with the direct loans. And their question was, if I don't consolidate the FFEL loans and the direct loans, and I'm applying for public service loan forgiveness, won't this mean that I have to apply for public service loan forgiveness twice? And the answer is yes, you would have to apply for it twice if you wanted to have all the debt forgiven. So this example here, we have two loans. We've got a direct loan that has 50 months of repayment history. Then we have an FFEL loan, loan number 2, that has 100 months of repayment history. If this person was looking to apply for public service loan forgiveness, the loan that would be become applicable first would be the FFEL loan, because that one has a number of months, 100, which is closest to 120. And 120 is the number of monthly payments you need to be able to apply to have that debt forgiven through public service loan forgiveness. So once those FFEL loans reach the 120-month mark, the person would submit a PSLF application. And if that application were to be approved, then the FFEL loan balance would be forgiven tax-free. But the direct loan balance would still be out there because that loan had not reached the 120 monthly payment mark. So what the person would have to do is they would have to wait until the direct loans reach the 120 mark and then submit a second application for public service loan forgiveness. And for those applications to be approved, the person would need to have worked for a qualifying employer for all of this time, the 120 months for the FFEL loans, as well as the 120 months for the direct loans. So to circle back to how this relates to consolidation, through the waiver, borrowers can combine their loans through a consolidation. And according to the Office of Federal Student Aid, I want to read to you their language directly. It says your consolidation loan will receive credit for time in repayment on your loans with different counts. Your consolidation loan will be credited with at least the largest number of payments on the loans that were consolidated. So if we relate this to the example that's given here, you have a direct loan with 50 months of repayment history. You have an FFEL loan with 100 months of repayment history, assuming the borrower has worked directly for a qualifying employer in a full-time status for all of these months. If these two loans are consolidated, the direct consolidation loan would then be given credit for 100 months. If the loans are consolidated and they are given credit for 100 months, that means that once the person makes their next 20 payments, once they hit that 120 mark, they could submit the application for public service loan forgiveness. And once the application has been evaluated to make sure that they have the employment history for the entire 120 months, as well as the 100 months of repayment history, then their debt on all of that loan could be forgiven tax-free. So to answer the question, if you are looking to apply for public service loan forgiveness one time, and you're looking to do that through the waiver, then consolidation would take these loans that have different repayment counts, and it would combine them, giving them credit for at least the largest number of payments on the loans that were consolidated. In this circumstance, that highest number of payments would be 100. So again, just to review those possible reasons to consolidate, of course, there's easier record keeping if you have multiple loans with multiple servicers. Also, gaining credit for past payments toward PSLF. And this example is it's just a great illustration of that, gaining credit for those past payments, as well as placing loans with differing repayment histories onto the same PSLF clock. So this person, after consolidation, would be able to submit one PSLF application instead of two. All right, we've got another question on PSLF. It says, my PSLF count says that I have 137 eligible payments and 94 qualifying payments. What does this mean? I know that that language can be a bit confusing. In this case, I actually had a borrower who shared with me the letter that they received. So I just took a screenshot of the results here. So we have some direct consolidation loans that were dispersed in August of 2005. If we look at the payment counts, we have PSLF eligible payments there, 137. And of course, 137 is greater than the 120 monthly payments required to obtain forgiveness through public service loan forgiveness. But of those eligible payments, the servicer has to verify employment history. So the next column that you see that says PSLF qualifying payments total. The qualifying payments are the number of payments that the servicer is saying you officially have out of the 120 that are necessary to be approved for public service loan forgiveness. So in this case, the person has 137 payments, but only 94 of those payments are currently qualifying. So both of these columns highlighted in blue, the two of those numbers added together, the 94 and the 26, equal 120. So the servicer is telling you, you have 94 payments that qualify. Now, if you have 94 payments that qualify, you have 26 remaining payments to make to get you to the 120. So one reason that this can cause a bit of confusion is because the words eligible and qualifying sound very similar. So people look at the columns and say, well, I'm at 137, that's more than 120. Why isn't that good enough? But the qualifying payment count is the count that actually matters. That's kind of your official number of your progress toward the 120 payments that are necessary for PSLF. Now, the last column says estimated eligibility date for PSLF. This is where this particular example gets even more interesting, because if we're looking at this letter, which was received by the borrower in March of 2022, if the borrower has 26 remaining payments, then that would put us out to April of 23, April of 2024, and another couple of months. So that would put the borrower out to the middle of 2024. But the date that's listed here for estimated eligibility is April of 2023. And I'm sorry, I misspoke. That would put them out until probably around June-ish, mid 2024, but what's listed here is April of 2023, which is just 1 year away. So it appears that something about the math just isn't quite adding up. And of course, that is why some people are confused about where they stand when trying to figure out how many monthly payments they have toward the 120 that are needed. So in this case, I asked the borrower, have they submitted more than one application to certify employment? Perhaps the servicer has reviewed one of those applications and not the other. Or if there were several of those applications, maybe they reviewed all but one. But this looks to me as if their qualifying payments count still has some work to be done. And the most obvious thing to point to would be employment history that has yet to be verified or perhaps is missing. Also, depending on the date of the letter, it's quite possible that the letter may have been issued when the servicer was still using the original PSLF program rules to evaluate applications. So this letter was actually from March of 2022, so I'm not sure that that consideration is applicable here, but it's just something to be mindful of. The waiver just went into effect in October of 2021, and things like that take time to implement. So some people did get letters early on when they applied, right after the waiver was announced. They received letters that told them you're not eligible, and those letters were based on the original program rules. But now that we're a few months out, we're getting to a place where the letters that come from the servicer should be updated to reflect the rules of the limited waiver instead of the original rules of the PSLF program. So in this case, I would advise the borrower to reach out to the servicer and ask them if all of their employment history has been verified, or check in the online portal to see if there are any details on the payment count screen, to see if there are months listed there where employment still needs to be verified. So check in the online portal first. If you're unable to get a sufficient answer there, then I would say place a phone call. Definitely reach out to see why there is such a gap. And in this case, with someone that has 137 payments, my hope is that the qualifying payments figure will be updated to match the 137 if it's found that employment was there all throughout. And hopefully this person can have their loans forgiven tax-free as soon as this is sorted out. And this is a great opportunity for me to share that the Maryland Center for Collegiate Financial Wellness has started a statewide awareness campaign around public service loan forgiveness, especially the limited waiver. And that campaign is called MD-TAPS. MD-TAPS stands for Maryland Tell a Public Servant. We want to tell as many public servants as possible about public service loan forgiveness and the life-changing opportunity that is available through the Limited PSLF Waiver. So you can visit us online at mccfw.org/MDTAPS for details. The resource page provides information about the limited waiver, next steps for borrowers, and of course refers back to the Department of Education as the primary source for information related to the limited PSLF waiver. So if you know public servants, if you work for a qualifying employer, if you're in government or you work for a 501c3 not-for-profit organization, please do share this information with your colleagues. I was actually walking out of a CVS today, and there was a young woman who was asking for donations for a nonprofit organization, and she had the 501c3 determination letter taped to the table where she was asking for donations. So as I made a donation, she asked me, "What do you do for a living?" And I told her, I'm an author and I have a nonprofit organization myself. She said, "What do you write about?" And I told her student loans. And she said to me, "My student loans are redunculous." That is her quote. "They are redunculous." And so I, told her, if you work full-time for this organization that has this 501c3 determination letter sitting on the table, I want you to look into public service loan forgiveness, because it's possible that you could have the balance of your debts forgiven tax-free after making 120 monthly payments while working directly for a qualifying employer. Of course, there are lots of rules to the program, but this waiver has temporarily relaxed those rules. And so I'm hopeful that that young woman will look into the waiver and that she'll tell a friend and her colleagues at that nonprofit organization to at least explore the waiver. If they're not at the 120 month mark already, perhaps they can gain credit for past months, but it's just really important to increase awareness of this waiver before it expires on October 31st of 2022. So please do spread awareness about this time-sensitive opportunity that can bring public servants closer to realizing federal student loan forgiveness. So since I've talked quite a bit about the waiver, I did want to talk a bit about public service loan forgiveness under the original rules, because after the waiver expires on October 31st of 2022, we are expecting that the old rules will return. So I'm going to walk you through the 5 requirements of public service loan forgiveness under the original rules of the program. The first requirement is that you have to make 120 qualifying payments. The next requirement is that the payments have to be made on direct loans. Third is that the payments have to be made while the borrower is enrolled in the qualifying repayment plans. Fourth is that the borrower has to work directly for a qualifying employer. And fifth, they must be working for a qualifying employer when they apply for and receive public service loan forgiveness. As per the IRS, the forgiven amount is not treated as taxable income at the federal level. So let's walk through these requirements in detail. The first requirement is qualifying payments. Borrowers have to make a minimum of 120 monthly payments under the original rules, and those payments must have been made after October 1st of 2007. They also must be made on time and in full. Multiple partial payments are treated as one payment, And to be considered on time, all payments must be received within 15 days of the due date. Fortunately, the payments do not need to be consecutive. So if you change employers, if you took a break from work or a break between employment, you wouldn't lose credit for the monthly payments that you made prior to that break. It's just that during that break, the payments that you make would not count because you're not employed in public service. Extra payments also do not qualify. So there's no way that you can speed this up and pay extra to make the process take any less than the minimum of 120 months. Just a quick note about the CARES Act forbearance. As long as the borrower is working in public service, the months of zero payments on the loan should count toward the 120 that are necessary for PSLF. And again, that forbearance has been extended. The last time we had office hours, the forbearance was expected to end on May 1st. Now that forbearance has been extended until August 31st of this year. So let's move on to the second requirement, and that's that the borrower must have qualifying loans. The only loans that qualify for public service loan forgiveness are direct loans. So I've listed for you all of the direct loans: direct subsidized loans, unsubsidized loans, direct plus loans for graduate students, direct parent plus loans, as well as the direct consolidation loans. So only direct loans are eligible for public service loan forgiveness. Borrowers who have other types of loans can consolidate certain loans into a direct consolidation loan, and then that direct consolidation loan would become eligible for public service loan forgiveness. And if you're interested in consolidating, please do visit studentaid.gov. The application to consolidate is online, it's free, and you can complete it at any time. All right, let's go to our third requirement. That is qualifying repayment plans. The qualifying repayment plans include the 10-year standard plan, as well as all of the income-driven repayment plans. So the income-driven repayment plans are payment plans that are based on your household income and characteristics instead of being based on the balance that you owe. Whereas the 10-year standard plan is strictly based on your balance. The 10-year standard plan is one in which they look at your balance, set a fixed monthly payment, and you would pay that balance off within 10 years. So if you begin on the standard plan and stay on the standard plan, you shouldn't have a balance left to forgive at the end of 10 years. So the income-driven plans are most likely to yield a balance for forgiveness. There's several income-driven plans. There's income-based repayment, income contingent repayment, pay as you earn, revised pay as you earn. There's also a note about other plans, which could be qualifying, and that's when the monthly payment is greater than the 10-year standard plan payment. That I haven't seen that happen too often. So to be on the safe side, you should be enrolled in an income-driven plan. Payments from the 10-year standard plan count as well. You'll notice there is an asterisk there next to ICR. ICR is the only income-driven plan that's available to Parent Plus loan borrowers. So if you are a Parent Plus loan borrower and you are interested in paying those loans down based on your income or pursuing public service loan forgiveness, then the income contingent repayment plan would be the income-driven repayment plan for you. It's the only one available to parents. All right, so next let's talk about qualifying employment, the fourth requirement. And that is where you work. Where you work matters more than what you do. It's not your job title or your role within an organization that determines whether your employment is qualifying. It's where you work that determines whether the employment is qualifying. Qualifying employers include government organizations, that's federal government, state government, local, even tribal government and agencies. 501c3 tax-exempt organizations, as well as other not-for-profit organizations that provide qualifying services to the public. You can find more information about qualifying employment, along with anything else you want to know about public service loan forgiveness, at studentaid.gov/PSLF. In terms of employment, you also need to be considered full-time. The definition of full-time is the greater of your employer's definition of full-time or 30 hours per week. If you are not full-time, but you have more than one position, but both positions are for qualifying organizations, then those positions can be combined together to achieve the full-time requirement for the number of hours worked per week. So multiple part-time jobs, as long as they are for qualifying organizations and you are considered a direct employee, you can combine those to equate to full-time employment. Just a quick note for borrowers at nonprofit organizations that are involved in the religious space, such as religious instruction, worship services, or proselytizing. Prior to July 1st of 2021, those hours spent in those activities would not count toward public service loan forgiveness, but that rule was changed July 1st of 2021, and that has definitely eased the burden of people trying to look at their average hours per week and divvy up how much were spent performing qualifying services for the general public, and how many of those hours would be considered as dedicated to religious activities and not necessarily public services. All right, our fifth and final requirement is around employment and timing. Borrowers must be working in a public service career that is for a qualifying employer at the time that they submit their application for public service loan forgiveness and at the time that loan forgiveness is received. So for people who may have worked for a qualifying employer for 20 years, but didn't find out about the program until after they'd retired or changed careers, they would not be able to take advantage of this benefit under the original rules. But the waiver is a different story. Before I get to the waiver, I just want to share this with you, that when you look at those 5 requirements that I went through with you all, that's a lot that has to be in place for 120 months. So in the earlier part of this program, from late 2017 to 2021, 98% of borrowers who applied for the program have been rejected. The government created a follow-up program called the Temporary Expanded PSLF program that removed the requirement around eligible repayment plans. That program had a similar rejection rate. But in October 2021, the Department of Education announced the Limited PSLF Waiver. And I just want to show you all how much of a difference the waiver is making. So the total number of borrowers approved prior to the waiver, these are borrowers who had their debts forgiven through public service loan forgiveness. During roughly almost a 4-year period, there were roughly 16,000 borrowers who had their applications approved. The waiver was announced in October 2021. Between that time and the end of February of this year, nearly 83,000 borrowers have been approved for public service loan forgiveness through the waiver. So when you take a look at those numbers, that is proof that the limited waiver is indeed making a difference. And if you think you might be eligible for any credit toward the 120 payments needed through this waiver, I would encourage you to apply and apply ASAP. So before we talk more about next steps, I just wanted to share with you a slide that truly illustrates the difference between public service loan forgiveness under the original program rules and public service loan forgiveness under the limited waiver. So the left-hand column is, you're going to see a list of the 5 requirements that we just went through. 1, 120 monthly payments. 2, on direct loans only. 3, while enrolled in qualifying repayment plans. 4, while working for a qualifying employer. And 5, also working for that qualifying employer when the borrower applies for and receives public service loan forgiveness. In the middle, we have temporary expanded public service loan forgiveness. You'll notice the list is the same, except for that middle requirement about being enrolled in a qualifying repayment plan. That one has been removed. Now, if we look at the waiver, we've got some language that changed. The first requirement is no longer monthly payments. It's 120 periods of repayment. Periods of repayment, that means months that your loans were in a repayment status. It doesn't mean that a payment actually had to be made. It means that your loan was considered in a repayment status. The loans do not have to be direct. The repayment plans did not have to be certain qualifying ones. And the borrower does not have to still be working for a qualifying employer at the time that they submit the application and receive public service loan forgiveness. The other remaining requirement, and this is one that you can't get around in any way because this program is for people who work in public service, that requirement is that the 120 periods of repayment had to take place while the borrower was working for a qualifying employer. So just remember, for anyone who wants to take advantage of this program, you must have worked for a qualifying employer. Either you work for one now or you worked for one in the past. And to have your loans approved for forgiveness through the limited waiver, they're looking for periods of overlap, the 120 periods of repayment while you were working for a qualifying employer. So if you no longer work in public service, you went to the for-profit sector, or you retired, that's okay. If you have the 120 periods of repayment while you were working in public service, then I strongly encourage you to apply for PSLF through the waiver. All right, so a bit more about how the requirements stack up, the old versus new rules for PSLF. Under the new rules, any prior payment will count as a qualifying payment regardless of loan type, repayment plan, or whether the payment was made in full or on time. We're looking again at periods of repayment, not actual payments made. This change will apply to student loan borrowers with direct loans, those who have already consolidated into the direct loan program, and those who consolidate into the direct loan program by October 31st of 2022. For Parent Plus loan holders, Parent Plus loans alone are not eligible under the limited PSLF waiver. However, if you are a person who has borrowed Parent Plus loans for your child's education, and you also have an outstanding balance on student loans that you have taken out for your own education, it is possible that through consolidation, your Parent Plus loans could be, you could receive a higher count toward the 120 necessary for PSLF, or those Parent Plus loans could be forgiven through public service loan forgiveness, but not by themselves. They would have to be consolidated with loans that you as a parent took out for your own education as the student. All right, so if you're thinking that you might be eligible for PSLF, especially through the waiver, what should you do next? Just be mindful, this is a time-sensitive opportunity, and this is for borrowers who either work or have worked directly for qualifying employers after October 1st of 2007. So this is for people who have worked for qualifying employers. If you do not have work experience for a qualifying employer, then public service loan forgiveness nor the limited waiver will help you. You have to be working for a qualifying employer in public service. So there are 3 steps to determining basically your path for applying for the waiver. The first step is to know your loans. You can visit studentaid.gov, log in, take a look at your loan types. And when you view the loan types, that will help you determine your next course of action. If all of your loans are direct loans, meaning they have the word direct in the name of the loan, then you technically do not need to consolidate. But as you saw from the example earlier this evening, if you have all direct loans, but they have differing repayment clocks or varying lengths of repayment history, then you may want to consolidate those loans, even though they're direct. But the bottom line is the first thing you need to do is know your loans. Second is you have a decision to make, and that's whether to consolidate. If you have non-direct loans, then you have to consolidate if you want them to be considered for public service loan forgiveness. If all of your loans are direct, you do not need to consolidate, although in certain situations, you may find it to your advantage to do so. Either way, if you have to consolidate, the application to consolidate is available to you online at studentaid.gov, and you want to submit that application by October 31st of 2022. The next thing you'll need to do is certify your employment. There is no way to obtain PSLF without verifying your employment for a qualifying organization. So a great place to start to verify that your employer is a qualifying organization is the PSLF help tool available again at studentaid.gov. If you go to studentaid.gov/PSLF, you will be able to begin filling out the form online before you submit that form to each of your employers for verification. You can also download the paper version of the PSLF application via studentaid.gov. For those who are using the help tool, if you put in, you're going to need to put in your employer's employer identification number. When you put that in, if your organization is included in the database, then you'll see it pop up with a little green button that says eligible. If your organization is not in the database, or they're just not a qualifying employer, then you will see that it's ineligible. For those of you that work for organizations that are tax exempt and provide qualifying services, it's quite possible that your organization would be considered eligible, but perhaps no one else has applied from the organization yet, so it's not in the database. So if you work for that kind of organization and you're using the help tool and the search is returning nothing, or the employer is coming up as ineligible, don't write yourself off necessarily. There will be a few extra steps that you have to complete to prove that the employer is indeed an eligible organization for the purposes of PSLF. Either way, submit your application to certify your employment no later than October 31st of 2022. And you want to make sure that you certify your employment for every organization that you have worked for that falls into one of those categories: government, 501c3 nonprofit organizations, or other tax-exempt organizations that provide qualifying services to the public. Every organization that you've worked for after October 1st of 2007, while you had federal student loans that were in repayment. So if you've had 3 employers, in the entire time you had loans that were in repayment, you need to complete a PSLF application for each of those employers and make sure that you submit those forms by October 31st of 2022. I would like to share with you some informational resources on public service loan forgiveness. The first one, the number one resource, of course, is the Office of Federal Student Aid, and you can visit them online at studentaid.gov. There you can view your loans, access the PSLF help tool, and complete the application to consolidate. The second one is the Maryland Center for Collegiate Financial Wellness. We are here semi-monthly for office hours, but we also have an online resource page dedicated to the Limited PSLF Waiver, and that is mccfw.org/MDTAPS. And again, MDTAPS stands for Maryland Telepublic Servant. Another great resource is the Institute of Student Loan Advisors. You can visit them online at freestudentloanadvice.org. They also are the leaders of a Reddit thread, the PSLF mega thread, where you will see many posts from borrowers who are applying for PSLF, TEPSLF, and through the waiver. And you can read their questions, you can read their experiences. Some people put out detailed timelines about the communications that they're receiving from the servicer and from the Department of Education. And it's just very helpful sometimes to see what people are going through day to day, because I know I'm giving you lots of theories, lots of rules, and telling you how things should work, but how things work in real life can sometimes not be as smooth, or sometimes they may surprise you and be smoother, who knows? But either way, if you want to get information straight from people who are going through this process right now, then that PSLF mega thread is a wonderful site to visit. Also, the Student Borrower Protection Center has created a new website, a new resource. It's forgivemystudentdebt.org. Has a lot of information about the waiver, steps to take to go about applying for PSLF through the waiver. And again, just a great resource. That's forgivemystudentdebt.org. And one thing that we are doing at the Maryland Center for Collegiate Financial Wellness is asking borrowers to share their experience with applying for public service loan forgiveness through the waiver. This is not just for people who have had their debts forgiven, but for those who perhaps have had account increase, someone that may have gone from zero eligible payments to 84, or just showing the difference that this waiver is making for federal student loan borrowers. So I just wanted to share with you the experience of one borrower. The borrower said, I recently had my loans forgiven. I was very skeptical and not very hopeful about my chances, given all of the rules and caveats from early Department of Education administration of the program. I was ecstatic and still am when I received the letter stating that my obligation had been fulfilled and I no longer owed anything on the loans. It's a definite game changer for me, and I guess the same is true for most other beneficiaries. So the waiver is real, is working for thousands of borrowers. And if you are a person who's had a career or still in a career for a qualifying organization in public service, and you have federal student loans that have been in repayment, please do complete the PSLF application. Just see how many months you have toward the 120 that are necessary. Some of you may be beyond the 120, but you'll never know until you apply. So please visit studentaid.gov/PSLF and begin that application process. And if you are a borrower who has experienced some success through the waiver, please share your experience with us at mccfw.org/MDTAPS. All right, so let's wrap it up with two common questions. One is, how do I know if I qualify for PSLF through the limited waiver? The answer is qualification depends on your employment history and your repayment status history. You have to certify your employment to begin the process of applying for public service loan forgiveness. If you do not submit documentation of your employment, the Department of Education and their designated servicer will never know to begin counting your months of progress toward the 120 that are needed to achieve public service loan forgiveness. So you certify your employment, the Department of Education will take care of evaluating your repayment history, going back to look at your loans and count the months that your loans were in a repayment status. And last question, what should I do next and when? That depends on the types of loans you have. For everyone, you need to know your loans, and you can log into studentaid.gov to view those loans, and you want to look for whether your loans are direct or non-direct loans. If you have non-direct loans and you want those loans to be considered for public service loan forgiveness, then you would need to consolidate them by October 31st of 2022. For all borrowers, whether you need to consolidate or not, you must certify your employment, because certifying your employment begins the process of having your repayment history and your employment history being reviewed and counted for progress up to that 120 months that are necessary to achieve public service loan forgiveness. So before I go, I must tell you again, Maryland, please tell a public servant. And I know we focus on Maryland because we are the Maryland Center for Collegiate Financial Wellness, but we want borrowers across the nation to become aware of public service loan forgiveness, especially the limited PSLF waiver. We have seen the difference that the waiver makes, and we are committed to spreading awareness about this time-sensitive opportunity that can bring public servants closer to realizing federal student loan forgiveness. Please visit mccfw.org/MDTAPS, that's MDTAPS, for details. If you're sharing any information on social media about the waiver, please use the hashtag MDTAPS so that we can see that you are definitely joined in the conversation. So I have checked the chat and the Q&A throughout. I'm looking at our Facebook page. I don't see any questions on the stream, and it is 7:59. Wow. So I'm just going to hang tight for another minute. I guess it's a great time always to say that my name is Tisa Silver Kennedy. I'm the founder and director of the Maryland Center for Collegiate Financial Wellness, and you have tuned into Office Hours, a free semi-monthly student loan clinic that's held online to provide borrowers with trustworthy information about achieving success beyond student loan repayment. You can visit us online at mccfw.org to take a look at our upcoming events, to also get in touch with us if you have any questions. And you can connect with us on social media on all platforms at the MCCFW. Again, that's at the MCCFW. All right, I'm going to take a look at the chat once more. No questions. And looking at Facebook one last time, I don't see any questions. All right. Well, the clock has struck 8, so I hope that I have answered everyone's questions. I thank you for taking the time to join me for office hours this evening, April the 13th. And again, I'm Dr. Tisa Silver Kennedy for the Maryland Center for Collegiate Financial Wellness. I wish you well, and I will see you on our next edition of Office Hours. Visit us online in between at mccfw.org. Take care in the meantime.